Alrighty, so Canadian housing prices are out of control, or that's what these charts would have you believe. So let's go through some of the craziest charts that hit Twitter this week and talk about where I think the Canadian market is going to go. Actually, I don't know where it's going to go. All right, I'm just as shocked as everyone right now. I cannot believe the rally we're seeing in housing. It feels premature, feels too early to me, but I would love to hear what you guys think. So let's jump right into some of these charts. All right, so this is the first one. This is an updated version of a fan favorite. The Bears love this one. This is the juicy bear chart that they love to compare United States to the Canadian housing market, home prices versus incomes, right? So home prices in red, incomes in gray. And as you can see, the United States, they've more or less traded in line. You've got home prices trading roughly parallel with incomes from 1980 through 2022. Of course, in 2008, you see a little bit of exuberance there. It corrects and then rallies over the coming decade. In Canada, we have a whole different picture altogether, right? We have incomes here increasing, but stagnant in comparison to home prices, right? So incomes increase just like America, but home prices just absolutely shot through the moon. And this is something I think I've pointed out on previous videos, but essentially the Ontario alone makes up 60% of the weighting for this chart. So Ontario home prices alone make up 60% of this chart in Canada. That obviously isn't the case in the United States. There's no state that is that dominant in terms of transaction volume that makes up that much amount of the weight. And if you go a step further and you say, okay, what is the GTA, Greater Toronto Area, and Vancouver make up for the Canadian housing chart? The number's actually about 80%. So 80% of this chart is made up for by two major markets, right? Which again, in the United States just isn't the case. So the question I had, and I answered in a previous video, is, well, what if you looked at just one area in America, like New York City, for example? Because you're kind of looking at the Canada chart, and in reality, Vancouver and Toronto are most of the equation here. So what if you were just looking at New York? And of course, the chart for that looks very, very similar to the Canadian housing market chart, where home prices are entirely detached from incomes. And of course, that's exactly what you would expect in New York. So my argument is, of course, that's exactly what you would expect in Toronto as well, given, sure, we're not comparable to New York, but Toronto's certainly our financial and job hub of the country. So to argue that home prices in Toronto are going to trade parallel with disposable income over a long period of time is, of course, an asinine argument. Now, this chart is where things get a little bit grimmer, in my opinion anyways. The question when you look at this chart becomes, well, what can our children expect? Is owning a home even in the cards for, people in their 20s or younger right now? And of course, it's a hard question to answer, but when you look at the value change from 1975 to 2022, the average Canadian home is up 416%. So we are first. We're in the number one spot here. Australia, close second at 400%. Australia, obviously a country with a lot of the same problems we have in Canada when it comes to the housing market, right? Multiple bids on any entry-level product. Very, very hard to get your foot in the door and very expensive real estate. What's really interesting is you look at Japan, negative 6%. So your average Japanese home is cheaper today than it was in 1975. Fascinating statistic, and also goes to show what population change can do to a housing market, because obviously Japan has a declining population. Carrying cost, we are number 2, right? And the way they do carrying cost is just a ratio of interest payments versus income level. And Canada is obviously, we've seen interest rate hikes just like Australia has. And so our carrying costs have gone up in the last 12 months despite housing prices falling. So inevitably the argument becomes, well, let's build more housing. That'll solve the problem. The thing is, we are building a lot of housing, or at least at first glance, it seems like it, right? So if you look at the crane index for North America, Toronto is once again number 1. All right, I'm feeling a little patriotic. Look at that, 225 cranes in the sky in Toronto. Nobody even close except for Vancouver, another Canadian city. And then you've got Miami at 144 cranes, Nashville at 110, Los Angeles at 51, San Francisco at 13 cranes, right? So we obviously are building a lot of towers. We're building a lot of towers. But again, something I want to point out here is, like, look at an aerial shot of New York and then compare that to an aerial shot of Toronto and tell me that we don't have room to grow. Toronto is, over the last 5 years, the fastest growing city in North America by population growth. A lot of the city is still covered in single family detached, and that's a result of zoning that I won't get into in this video, but regardless, my point is the only way to build yourself out of a housing crisis is, of course, to build up. You can't build out. There's only so much you can build out, and it doesn't do a whole lot for affordability when the median sort of freehold property in the GTA is like 1.5 million. Condos are obviously the way out of this because they are the only affordable, reasonable means of access to first-time home buyers, where you can still get into the market with $500,000, $600,000, $700,000. But the reality is, despite all of the building we're already doing in Toronto, and I would argue that maybe we're even already at capacity in terms of how many units we can actually build, because we know there's demand for more. Condo buildings sell out in a weekend, so why don't we build more? Well, the reality is there's only so many developers and there's only so many tradesmen. But if you look at the population growth in the GTA for 2022, you'll see that we grew by 147,000 people. That is after accounting for deaths and emigration, because obviously we're seeing major outflows out of Ontario. It started during COVID. It's continuing now as people are moving to more affordable provinces like Alberta, like Nova Scotia. Despite all of that outflow, we still saw a net growth from July of 2021 to July of 2022 of 147,000 people in the GTA alone, which is a number that we simply cannot build enough housing for in a year period. And it's also worth noting that last year, a lot of our immigration was seen in the second half of the year, and this number doesn't reflect that. So we have all-time high population growth in a city that was already growing rapidly. And just to drive the point home a little bit further, we'll pull open Bloomberg here, and you can see that Canada's population grows by over 1 million for first time. Annual expansion of 2.7% is fastest among advanced economies. We are the fastest growing G7. You can see it here that from 1975 through today, fastest growing year was last year. But at the same time as that extreme population growth, we're seeing interest rate hikes. Well, what do you see as a result of interest rate hikes? Investors kind of pump the brakes. And if investors pump the brakes, well, you can't build new housing because you need investors to come in and buy up new units. That way, developers can hit construction financing and actually build the building. So we have actually already started to see housing starts fall. So we have the highest level of immigration in multiple decades, and in 5 years, the lowest level of housing starts in Canada, which leads me to the question, do we really think affordability is going to get better over the next 5, 10, 15-year horizon? I don't see a world where it does. And if you look at affordability today as a result of interest rate hikes, yes, property prices have fallen, but interest rate hikes have more than offset that. It costs more to carry your $1.2 million home today than if you bought it at the peak for 1.5 but locked in that low rate, right? So it costs more to actually own that home today. It is more advantageous for you to buy it today, obviously, because you date the rate and marry the price. I get that fundamentally, but regardless, it is still, in terms of debt carry, it's still more expensive to carry today. And of course, people will argue, well, this is just a dead cat bounce. Yes, the housing market is rallying today. The amount of interest in investment properties is really surprising even to me. But with that being said, the argument a lot of people are making is, well, just wait, right? People are bleeding on a month-to-month basis, and you're going to start to see that listing inventory come to market, and that's when prices start to actually fall again. But CIBC is telling us a different story. So if you look at this chart that CIBC just put out, you can see that excess cash is growing. So household savings rate is actually increasing despite the fact that borrowing costs are through the roof. And I am seeing this in the pre-construction market. And I know you're asking the question, is this guy really featuring his own tweet in his video? And the answer is yes, of course I am. I'll give you a backstory. A few weeks ago, a pre-construction project launched in Markham. They sold out in hours. They were oversubscribed something like 10 to 1 on one bedroom. So for every one bedroom there was available, and there was over 100 of them, there was more than 10 buyers lined up with drafts in hand ready to buy that unit, right? They sold out that building. Then they launched their phase 2 tower. A couple of weeks later, they sold out that building in a weekend at much higher prices as well. Now you fast forward to today and you have a condo building launching in Aldershot. We sent out an email on this one to our database because I thought it was pretty good value and the rents were really good for the area. Now we have a large database, so we can pretty accurately predict the response of things and the current sentiment of the market based on, how things do when we send it out. And we got 40% more interest in that project than any email we have sent in the previous 24 months. So investors are starting to come back. They're starting to poke around and look at opportunities, and sentiment seems to be back. People are lining up to buy pre-construction condos for slightly more expensive than they would pay for an existing unit on the resale market. So speculation is inherently baked into that purchase, yet people are doing it, and they're doing it on a large scale. And this really is why they're doing it, is because we have had a brutal 12 months. Housing prices in the GTA have fallen, depending on the market, up to 20, 25%, right, as a result of interest rate hikes. But you've had a couple of rate announcements where interest rates haven't budged. So they haven't come down, which of course would be incredibly bullish for the market, but they have not come down, but they also haven't gone up. And so I think a lot of Canadians are taking that as the green light to start pouring that excess cash into investment properties. And you can see on this chart here that we just had the first month in quite some time where housing prices nationally edged upwards. Very small number, right? But it's the first not red month in quite a few months. So again, I really don't know where we're headed from here. I expected a very slow, a very quiet year, but we aren't really seeing it. So I'm really curious. What do you guys think of the market? If you're out there currently looking, I know you're probably in multiple bid situations. It seems a little crazy to me. So I'm curious what you guys think comes in the next 6 to 12 months. Leave your comments below, and I will see you guys next video.